Okay, so here's something that definitely caught me off guard this week. Warren Buffett, 94 years old, stepping down as CEO of Berkshire Hathaway. End of the year. After what, 6 decades?
60 years, yeah. It's really the end of an era.
And what's wild is apparently it was news to almost everyone, even, most of the directors. And his successor.
That seems to be the case. Quite the bombshell, even internally, it seems.
A real turning of the page.
It absolutely is. And for anyone maybe less familiar, Berkshire Hathaway, well, it wasn't always this giant. It started as a textile company back in '65 when Buffett took over.
Right, textiles.
Yeah.
A long way from where it is now.
Oh, completely. Now it's this massive insurance firm primarily, but also a huge conglomerate. Think energy, railways, retail.
Sees candies. Can't forget the candy.
Can't forget the candy, exactly. And his whole approach, the bedrock, has always been this value investing strategy.
Finding those solid companies that the market's just not pricing correctly. Undervalued gems.
Precisely. Looking for intrinsic value that others are missing.
And, I mean, the results speak for themselves. The growth numbers are just staggering.
They really are. Between 1965 and the end of last year, the market value jump was, get this, over 5.5 million%.
Million with an M. That's almost unbelievable.
It is. A compounded annual return close to 20%.
Compare that to the S&P 500 over the same time. What was that?
Around 39,000% total return for the S&P. So yeah, big difference.
Huge difference. And today, Berkshire's market cap is like $1.16 trillion.
That's right. Trillion. Just phenomenal wealth creation.
So now the reins passed to Greg Abel.
He's been around a while, right?
25 years with the company.
Yeah.
And since 2018, he's been running all the non-insurance stuff.
The energy, the railway, the retail side of things.
Exactly. But look, this deep dive today, it's not just about, who's replacing Buffett. The information we've been digging into points to this really immediate and, frankly, massive challenge for Abel.
Which is?
It's the cash, the sheer amount of cash Berkshire is holding right now. Okay, right. Let's try and get our heads around this colossal amount of cash then, because the figures are pretty mind-bending.
They are. As of the end of March, $348 billion.
Billion, with a B, in cash and short-term U.S. government debt.
Yep. And here's the kicker. That's more than double what they held at the end of 2023.
Double. In just a few months.
That's what the numbers show. It's just an unprecedented amount of liquid assets for them. A huge pile of capital sitting on the sidelines.
You have to wonder about the implications of that much sideline cash, right? I mean, for the broader economy even.
It definitely raises questions. And the scale is fascinating too. Just their holdings in treasury bills, T-bills, that's about 5% of the entire outstanding market.
5% of all U.S. T-bills.
Roughly, yes. Think about it this way. If Berkshire were a foreign country, its U.S. debt holdings would make it the 10th largest holder.
10th largest. Bigger than who?
Bigger than India, bigger than Switzerland, Taiwan. It just shows the immense financial weight they carry.
So how did they end up with this giant war chest? Where did all this cash come from so quickly?
Well, it seems Buffett's been pretty actively selling stocks over the past year or so.
Selling, including some big names.
Including trimming a large chunk of their Apple stake, which was, a huge position for them.
Wow, okay. That's significant.
And it means for the first time in maybe 2 decades, Berkshire actually holds more in cash and equivalents than it does in listed stocks.
A major shift in their balance sheet.
A really significant shift. And, so far, it looks like it's paid off, at least in the short term.
How so?
Well, Berkshire stock is actually up around 20% this year.
Okay.
While the S&P 500, the broader market index, is actually down about 3%.
So being cautious, holding cash, has actually boosted their performance relative to the market.
It certainly suggests that, the move seems to have sheltered them from some of the recent market dips.
But it still begs the question, why?
Right.
Why sell off equities and hoard cash like this? Is it just market timing?
Well, according to Buffett himself, he's just been finding it really hard to find companies to buy at what he considers a, quote, reasonable price.
Even with some market volatility recently. Prices haven't come down enough for him.
Apparently not. He seems to think valuations are still quite high, historically speaking. It's the classic value investor's dilemma,
When everything looks expensive according to your metrics.
Exactly. What do you buy? So holding cash becomes the default. It's a direct result of struggling to apply that core value strategy in today's market.
Buying that dollar for 50 cents, as they say.
Right. And if you can't find those opportunities, you wait. You preserve capital.
Which leads straight back to Greg Abel.
Huh.
Okay, you've got $348 billion burning a hole in your pocket, metaphorically speaking.
Right.
And the old playbook, the value investing playbook, seems harder to execute right now. What do you do?
That's the multi-billion-dollar question, isn't it? Well, one avenue that looks interesting is maybe looking more overseas.
International investments.
Mm.
Has Buffett done much of that?
He's made some notable bets recently, yeah. Particularly billions invested in some big Japanese trading conglomerates.
Oh, right. I remember reading about Mitsubishi, Sumitomo, those kinds of firms.
Exactly. And here's a compelling data point our sources highlighted. If you look at global companies worth over $5 billion with low price-to-earnings ratios.
So PE ratios below 10,
Yeah.
say, the kind of thing that signals potential undervaluation.
Precisely. Of those companies, by value, a whopping 80% are located outside the U.S.
80%. Wow. So the value opportunities might just be elsewhere geographically.
That's what the data suggests. It certainly looks like a promising area for Able to perhaps explore more aggressively than Berkshire has historically.
But stepping up international investing comes with its own risks, doesn't it?
Yeah.
Currency fluctuations, geopolitical issues, different regulations.
Absolutely. It's not straightforward. It adds layers of complexity that Berkshire has often seemed, well, somewhat cautious about embracing on a massive scale.
Okay, so international is one option, maybe. What about changing the strategy itself? Could Able, loosen the definition of value, maybe buy things that aren't too cheap, but are still good companies?
Moving away from the core value philosophy.
Yeah, to just get more money deployed.
Look, anything's possible in the long run, but in the short term, it seems highly unlikely.
Why is that?
Well, think about Berkshire's culture. It's built around Buffett and his value approach. Changing that fundamentally would be a massive internal shift, and frankly, Buffett's admirers, the shareholders who bought into that philosophy, might not react too well.
Right, you risk alienating your base.
Exactly. Plus, Abel's been there 25 years. He's steeped in the current culture. A sudden radical break right out of the gate seems improbable.
So if going big internationally has its hurdles and changing the core strategy is unlikely seen,
Wow.
What's left? Just waiting.
That seems like a very distinct possibility, yes. Waiting for a significant market downturn.
For prices to come down across the board,
Yeah.
creating those opportunities, Buffett was so good at seizing.
Precisely. History shows that's when he often made his biggest moves. Think back to the early 90s recession, buying Wells Fargo.
Or after the 2007-09 financial crisis.
Yeah, big investments then, too. Johnson & Johnson, Kraft Foods, more Wells Fargo. He was opportunistic when others were fearful.
That famous quote, "Be fearful when others are greedy, and greedy when others are fearful."
That's the one. The huge question now is, can Abel replicate that? Does he have that same almost oracular vision to identify the bottom, or at least those key moments when assets become truly cheap?
That's a massive weight of expectations.
No kidding.
So let's try and pull this together. The core challenge for Greg Abel stepping into these enormous shoes isn't just replacing an icon. It's figuring out what to do with this unprecedented $348 billion cash hoard.
Right. Especially in a market where the company's traditional, very successful value strategy seems to be hitting a wall valuation-wise.
The main options seem to be get more aggressive internationally, which has risks. Potentially shift the strategy, which seems unlikely and culturally difficult.
Very unlikely soon, yes.
Or play the waiting game. Patience. Wait for a market storm to create the kind of bargains Buffett excelled at finding.
That sums it up pretty well. More overseas huntings, stick to the script, but struggle for deals, or wait for a downturn.
Which really leads us to a final thought, something for you listening to chew on. Considering this enormous cash pile, the current market environment, everything we've discussed, what strategy do you think makes the most sense for Greg Abel? Should he push harder overseas? Should he wait patiently, potentially for years? Or is there another path? And what are the big risks and potential rewards you see with each approach? It's a truly fascinating situation.